I'm Jim D'Antona, CEO for the San Luis Obispo Chamber of Commerce. Since we can't be with you at our normal events like Good Morning Slow, it's our mission to keep essential information flowing in the community. We are designing our video content for you with that in mind. Today's video is a little longer form question and answer session with two local experts in their field. We're going to be posing some of the most frequently asked questions of them and that we're getting from our members to get you the answers you need to make the best decisions possible for your business. I have the honor of being with Kathy Eppright, employment law attorney with Andre Morrison Buttery, and Tim Dossa, and a CPA with Glenn Burdett. Let's go ahead and get the question started and maybe answer this question of how can a business be operating, and if so, how should it be operating? Kathy?
Hi, Jim. So I am getting that kind of question a lot from people since these orders have come down. So the main thing that people need to know is that there are several orders, federal, state, and local, that all apply. They all apply to businesses. And so figuring out whether you can continue to operate under these orders requires you to look at each of them. But probably the strictest is the County of San Luis Obispo. So look at that one and evaluate whether you fit within one of the categories that are allowed to remain open. You might notice that some businesses that fall into the same category seem to be operating and some seem to be closed. And that's because some may be able to operate under the current restrictions while others can't. So just because some restaurants are open and some are closed doesn't mean the ones that are open are violating the orders. It all depends on what kind of structure the company has in order to be able to function within the restrictions. And that's the main thing that businesses need to be thinking about. If you are falling within one of the categories that's allowed to remain open, it doesn't mean you don't have to worry about anything. You still have to worry about whether or not you can, as a practical matter, continue to operate. You may legally be able to operate, but technically, or as a practical matter, you may not, because you have to still be able to operate within the restrictions of the public health requirements. So you have to be able to provide social distancing. You have to be able to comply with OSHA guidelines that require you to provide a workplace that's free of hazards that are recognized. So if you think you fall within an exemption, don't just rush into running your business. Take stock in what you need to do within your workplace to make sure you can comply with the public health requirements. And if you don't know what those are and you're not sure whether you can comply, I would suggest consulting with an OSHA expert or somebody to help you set it up so that you're not violating those guidelines.
That's great. And Tim, from a financial and tax consideration purposes, are there issues there that a business should be considering?
Well, the tax man really never sleeps. So even though a lot of businesses are either operating or partially operating, or even not at all, tax returns still need to be filed. The good news is the federal government has given an extension of that deadline. So tax filings and payments are now due July 15th rather than April 15th. However, if you are having a tax filing date of May 15th or June 15th, like a lot of our nonprofits do, those dates are still in effect for now. We are waiting for guidance from the federal government if those will get moved. In addition, if you pay estimated quarterly income tax, Q1 payment is now deferred until July 15th. However, your Q2 estimated payment is still due June 15th. The state of California has matched the federal guidelines and moved all of their due dates to July 15th. Their estimated payments for Q1 and Q2 as well. So that part is nice for the state of California. Your IRA contributions and your HSA contributions from a federal standpoint also can be made all the way up to July 15th rather than April 15th. With the stock market being down now, that's probably a good thing for your IRA contributions. And lastly, if you file in multiple states, be aware that most states have complied with the federal deadline of July 15th, but not all. Some states are still silent on it, and there is a chart in our newsletter as well as a chart on the AICPA website that will provide that will keep you up to date with all the different state filing deadlines.
That's great. I really appreciate that good information there. And I guess it takes us to our next thought of, well, as a business, what steps can and should businesses be taking to adjust to the new reality, at least during these times with the orders in place? Kathy, are there legal considerations here?
Well, yes, a lot of businesses are having to face the decision about whether to do layoffs or furloughs, and there's a lot of confusion about what those terms really mean. Furlough is not technically a severance of the employment relationship. It's a temporary suspension of the person's either regular schedule or their work at all. And that typically is something that is done on the short term in order to, try to reduce payroll without losing talented employees that you want to maintain a relationship with. But the state of California says that if you're going to furlough somebody for more than 10 days or set a return to work date that's after the next pay period, the same pay period in which they start their furlough, then you have to pay them out all their accrued vacation and their final paychecks, even though you're technically not terminating them. So a lot of people are evaluating that. And I get the question a lot, how do I do it without finding myself being the subject of lawsuits? And layoffs can bring lawsuits, even furloughs can bring lawsuits. The lawsuits will typically be based on claims of discrimination. So before someone decides I'm going to lay off 25% of my employees or furlough 25% of my employees, they need to take a step back, develop a criteria for selecting people, and make sure that that criteria is not resulting in the selection of people based on that could have a negative impact on a particular group, say all the women or some other protected category based on race or disability or something like that. The last thing I would say that I'm getting a lot of questions about has to do with this new law about offering emergency paid sick and an expansion of FMLA leave. Those, fortunately, the Department of Labor clarified on Friday, if you look at their website, they have now questions and answers that help clarify that those do not apply to someone that's been furloughed or laid off due to a projected loss in business or drop in business. So those considerations, that new law only applies to those people that are continuing to still work for the company and can't for some reason because of the qualifying reasons in the law relating to COVID and the coronavirus.
And again, part of that, it's interesting how these legal pieces then fit right into a financial and tax consideration. And looking at, sick leave, FMLA, unemployment funding, Tim, what are we seeing from on that side that a business should be considering if they're going to adjust?
Yeah, one of the biggest questions we've gotten lately has to do with the payroll tax credits provisions of a couple of these different acts. So first, there was the Families First Act that provided a payroll tax credit. Basically, if employees went out on sick leave or out on FMLA. So it's a payroll tax credit that's available that is 100% of wages paid over the given point in time with a maximum of $511 per employee a day. That's if the employee is out, and Kathy will correct me on this, but if the employee is themselves out because of COVID-19 related illness or quarantine. If they're out because they have to care for a child or an individual, then it's 2/3 of their pay with a maximum of $200 a day. So there are payroll credits available there that employers should definitely take a look at. When the CARES Act just recently came out, there's a second payroll tax credit program available, which is basically a credit of 50% of your wages paid can be taken every quarter with a maximum of $10,000 per employee per quarter. This one, if you have over 100 employees versus under 100 employees, the definition of wages and what qualifies is different. However, you need to really think about each of these programs. If you take the credit for the Families First Act, can reduce what you are available to take on the CARES Act. So we need to plan it out pretty carefully. In addition, there's also provision in the CARES Act now that says you can defer the employer portion of payroll taxes for up to 2 years. And that started March 27th, which is the date it was signed into law. What it basically says is the 6.2% Social Security tax that the employer has to chip in, well, you can hold on to that and not remit it. And then 50% of what you owe needs to be paid by December 31st of 2021. And then the other 50% has to be paid by December 31st of 2022. So it's a good tool to hang on to cash, especially in the short term when people are going to need it. Just remember that it will be due eventually. And so you'll need to plan ahead at some time to pay that, whether that's through increased revenues or money you'd set aside. So that's an important act. In California, we don't have such a provision, but you can ask for a 60-day deferral of your payroll taxes. And there's a form that you have to send in to the EDD in order to get that. In addition, the CARES Act provided for unemployment funding, which is related to a lot of these folks that are going to go out on furloughs. And so you can get $600 a day extra. The federal government has provided that. They're providing another 13 weeks on top of what the states offer. And the first week of unemployment typically was not paid. Now it is. The federal government's providing funding for that. And lastly, they were providing funding for the states to increase staffing and targeted towards technology and systems, a lot of which the state's unemployment offices could really use from what I'm told.
Well, yeah, you just hit on a big piece there, obviously, for our businesses, and I know a lot of people are focusing on it, is how can they best take advantage of the new stimulus package enacted on Friday. And so, again, definitely some financial pieces, but Kathy, let's just jump in on the legal side. Anything in there that businesses need to be concerned about, and or questions you've been getting that seem key to making the decisions and trying to take advantage of this package?
Well, the question that I have been getting the most today is related to whether or not people should continue with plans to do temporary furloughs or layoffs now that there is this opportunity to obtain a loan from the government, a governmentally funded loan that provides for forgiveness if you're using the money that you're receiving in order to continue to keep people on payroll. And I have not gotten a clear answer yet to be able to say definitively whether or not you would be able to do it if you do layoffs or continue with layoffs. There is a formula that seems to suggest that if it's a small enough layoff or furlough, you'll still qualify for the forgiveness aspect of the loan. But the problem is that I think a lot of people right now are really struggling because they've got no income. Their income has all of a sudden been shut off. And so they're facing that terrible choice of having to risk not being able to make payroll if they keep people on, and that loan money doesn't come in soon enough. And nobody really knows how fast those loans are going to get processed. So I think that people need to be doing projections and evaluating whether or not they're going to be able to make payroll. And if they can't make payroll, then that probably should drive the decision. And I think that, and Tim probably can give a greater clarity on this than I can, but my feeling is that if you end up laying off people temporarily, furloughing temporarily, because you're not going to be able to make payroll based on current projections, and you get the loan and then can rehire, I'm guessing there's going to be the potential for some forgiveness at that point because these regulations are changing literally day to day. And so I would not be surprised if the government ends up softening some of that forgiveness formula and allows for more flexibility when the time comes at the end of the 4 months to evaluate what you did with the money.
Yeah, it's definitely one of those key questions we keep hearing over and over about, where's that balance between the furlough and the layoffs? And so looking at kind of that loan forgiveness, that paycheck protection program in the stimulus CARES package, Tim, give us a little bit of at least your take from the loans and grants and those protection pieces, if you could.
Sure. Yeah, and Kathy, you really nailed it. I mean, things are changing rapidly. We've got the text, and then we're getting interpretations and things. So what I say now could be drastically different tomorrow. But yeah, the paycheck protection loan seems to be a very interesting one. You can get, from what I've read, you can get a loan up to 2.5 times your average payroll amount over the last 12 months, and you can use that. The uses that they have suggested are for payroll, which includes health insurance costs, for rent, for mortgage interest, and for utilities. They have 6 to 12 months of deferred payments, and the loan forgiveness portion of it is pretty interesting. Whatever you spend in 8 weeks from the funding of the loan, whatever you spend on payroll, rent, mortgage, utilities, can be forgiven 100%, provided you haven't laid anybody off or you haven't reduced anybody's pay. But if you have laid people off and you have reduced people's pay, you can still get the loan forgiven if you rehire them or you put their pay back to what it was before by June 30th. So there's ways to sort of give you some time to work these things out and use that money. And then 4% interest, 10-year repayment, the terms are pretty generous. They've put $349 billion behind this program. What'll be interesting to see is if this becomes a more popular program, do they, borrow some money from programs that's not as popular to help fund this one even more? So that's a really good one to take a look at. Kathy, you nailed it. How quickly is this money going to be available? The SBA, they've been just slammed lately. But with other banks coming into the picture, being able to lend, the hope is that'll move along a little quicker. I mean, that sort of remains to be seen. The emergency disaster loans are sort of the other piece to the pie. So you can get $2 million of those, and basically your credit score is all they really need to evaluate you to get those funds. And the interesting thing about those is that when you apply for that loan, you can ask for a $10,000 advance up front that you're supposed to get funded within 3 days. That $10,000 is 100% forgivable, even if they turn you down for the loan. So that's an interesting option as well. You can't go use this with the payment protection loan, but you can take an existing EIDL loan and refinance it with a paycheck protection loan, excuse me. So there's lots of ways to sort of use these together. Again, the money can be used for payroll, it can be used for sick time, it can be used actually for if you've got increased costs because of your supply chain interruptions, you can use it for that. And then they've put sort of a general term around it as far as paying obligations that you can't otherwise revenue losses, which to me means like pretty much everything. So that's another way to go. The last piece of the pie, I would say, would be the tax law changes that are part of this. And I'm not going to drill down into the details of those. Basically, if you have a business and you had net operating losses or other types of losses, there are provisions now where you can carry them back. Some of the Tax Cuts and Jobs Act provisions prevented that. They've relaxed those rules. You can take losses and carry them back to previous years and then file amended tax returns to try to get refunds for those years. It's just another way to improve your cash flows. It covers things like AMT and net operating losses and business interest deductions. I read today that President Trump wants to bring back full deduction for meals and entertainment as well to try to get more people to buy food from restaurants. I'm not sure how we would meet at restaurants just yet, but I mean, I think the intent is good. So those are the changes on the tax side that business owners should be aware of and talk to their tax preparers about.
Well, so helpful, because these questions you guys are answering and helping kind of just, peel back a layer here are such key pieces of what business folks have been asking about and talking about and trying to, manage through these very difficult times. So first, let me say thank you both for spending so much time with us talking about some of these key issues. We truly appreciate you sharing your thoughts with our members on this video. For those of you watching, if there were more questions related to this topic that didn't get answered, please reach out to us via the website or social media and reference the video questions, and we'll do our best to get those questions answered. We want you to stay tuned for more videos like this with local experts in their field to help you stay informed on the best ways to navigate these tumultuous times. We are here for you. We thank you for watching. Please stay healthy and well. Take care.